Good evening, dear traders. Today we will talk about previous idea US dollar against Canadian dollar. So in previous analysis, we highlighted the key level at 1.37. Here it is. And the idea played out well. The market reacted with selling pressure and moved lower toward the 1.35 and 7, 1.36 zone. Fundamentally, the Canadian dollar has been supported by several factors: a broader risk-on environment, demand for commodity currencies, and rising oil prices, which add a premium to the Canadian dollar as a commodity-linked currency. However, correction risks are now increasing. From a technical perspective, the downside move has largely achieved its near-term targets. Price is approaching areas where demand may reemerge and momentum is starting to slow. So we can see here was a buying interest. In this context, it makes sense to consider taking profits on short positions as the risk-reward profile is no longer as favorable. An additional factor is the upcoming central bank rate decisions from the Federal Reserve and the Bank of Canada, both, which are likely to increase market volatility. It is also important to note that the interest rate differential remains in favor of the US dollar, which may limit further Canadian strength or trigger a corrective move higher in the pair. Overall, the primary move has already been realized. Fundamentals still support the Canadian dollar, but in the short term, the probability of correction and profit taking is increasing.